This is Horizons, Middle East and Africa, our top stories this morning. Asian stocks and U.S. futures slipping as caution takes hold ahead of the U.S. jobs report, and more Fed voices signaling rates may stay on hold for longer. Los Angeles tackles new blazes as the firefight enters a third day. The toll of devastation is climbing, with estimated losses between $135 to $150 billion. And Lebanon's parliament elects Army Commander Joseph Aoun as president, ending a more than 2-year power vacuum. It's just gone 8 a.m. across the Emirates. I'm Christine Burke in Dubai, in for Jumana Brisecci. Well, let's bring you up to speed with these markets because we look to be heading for a pretty soft finish to the week. I want to remind you that U.S. equity markets were closed yesterday as the U.S. celebrated the life of late President Jimmy Carter. And we also had an early close in bond markets. What you're seeing here on the screen is an indication for futures and the 10-year yield as to where we will open today when Wall Street gets back to work. You can see that S&P 500 futures are indicating that we might see a softer opening, pretty much trading sideways to lower. U.S. 10-year yields are coming back down after a lot of pressure in recent weeks that have driven yields steadily higher. And then I put this up on the screen here for you, the pound, because we are steady this morning, but the pound weakened to the lowest in more than a year yesterday amid concerns around government borrowing. And we are seeing commentary from banks out there, including Wells Fargo, that we should be prepared for potentially more weakness as the BOE moves to cut rates further. And then in the commodities market, we have Brent crude heading for a third consecutive week of gains. And if we do see the benchmark close out with a third week, that would be the longest streak of weekly winnings since the month of July. This comes as traders are looking at various data points that have come through over the last couple of days, indicating that we are seeing tighter stockpiles. And before we move on, I just want to note that the big thing for global markets today is going to be the U.S. jobs report, and we are going to be talking about all of that, so I won't get into that now, so stick around and do hear everything that we're going to say. But let's jump to EM stocks now, because in emerging markets, we saw equities yesterday move officially into correction territory. So equities in developing markets have now dropped 10% from the peak that they reached in October, and that has really been driven by the uncertainties over Trump's policies, and as there's a lot of uncertainty as well about what happens with China's growth prospects. Goldman Sachs now pulling back its expectations for return on emerging market equities this year. But the bank does say that it remains overweight on certain markets, including Saudi Arabia and also South Africa. And it did boost its outlook for Turkish stocks. So not all bad there when it comes to emerging markets. And again, we're going to be talking about that, too. We've got a busy show for you today. Let's move on now to one of our top stories. President Biden says the U.S. government will cover 100% of the costs of the California wildfires for 180 days, calling the devastation catastrophic.
So today I'm announcing that the federal government will cover 100% of the cost for 180 days. This is going to pay for things like debris and hazard material removal, temporary shelters, first responders' salaries, and all necessary measures to protect life and property.
Bloomberg's LA Bureau Chief John Gittleson joins us now. So, John, thanks for being with us at this critical time in the part of the world that you are in. We have the biggest fires happening in Palisades and also Pasadena, but there have been new fires that have broken out. Bring us up to speed with where we're at.
Yeah, well, the latest fire, actually, I was just on a few minutes ago and I was checking my phone, and there was a new one that popped up in the Pacoima area, which is in the San Fernando Valley north of LA, but that's pretty small. Just further west in the sort of Calabasas area, which is where a lot of celebrities like the Kardashians live, there was a fire that went from less than 50 acres early this afternoon. Suddenly, it's more than 1,000 acres now. And that came out of nowhere at a time when people were saying, oh, we're getting it under control. So this is like a game of whack-a-mole that's going on, only the moles are, these roaring fires that are driven by wind and feeding on brush that hasn't had rain for 8 months. And this brush is just, perfect kindling.
So what are authorities doing at this point in time? Certainly there are a lot of efforts underway, and we know that President Biden has released aid for efforts to contain these, but it doesn't look like we're getting any closer to seeing this situation contained, to these fires coming under control.
Well, I mean, there are neighboring states and Canada that are sending in reinforcements. it's, yeah, taking a long time to bring everybody here and all of their equipment and everything. But the real problem is, A, it hasn't rained in a long time, and B, we've gotten these, what we call in this area, Santa Ana winds. And when you get those winds that are blowing from the desert out toward the ocean, they just fan the flames and it turns it into an inferno. And on top of, everything blowing, when it's blowing that hard, you can't fight the fires with aircraft because either it's too dangerous for the planes and helicopters to fly, or even if they're dumping fire retardant and water, the wind blows so hard that it just disperses the water all around, while it's also dispersing embers all around that are starting new fires. So it's got to rain and the wind has to stop.
Yeah, and that brings me to my next point. What I was going to say here is, are there any indications that we are going to see rain, or that we are going to get weather conditions that will help in the efforts to contain these fires and stop the loss of human life?
No rain forecast for the next week. It should be cooler. The winds are supposed to die down this weekend, but early next week there's forecast to be another wind event, as they're calling it. So this is going to go on a long time, and people are going to get really tired of fighting this, of breathing the smoke, of losing homes. And but for right now, there's no end in sight, and there will be turning points. But really, we need Mother Nature to cooperate for this to come to an end.
Well, John, we can only hope that is the case. And there are a lot of forecasts out there this morning. AccuWeather saying damages and the economic toll could be well over $130 billion. We've also heard from a number of other voices that insurance losses could exceed $70 billion. So, John, thanks for being with us to break all that down. And do stay safe over there. That's Bloomberg's John Gittleson. Let's turn now to the U.S. payrolls report that's coming out later Friday. Economists think employers probably added 165,000 jobs in December, keeping the unemployment rate steady. Let's bring in Hamza Ayub, Director and Portfolio Manager at Farro Capital Executive. So, Hamza, great to have you with us today on such an important day. The U.S. jobs report, we've been counting down to it all week. Here we are. The expectation is that we will see more moderate but still healthy hiring over the month of December. What are your expectations for this report, and where do you see room for surprise?
I think 160,000 to 165,000 is the consensus, as long as the job report comes within this band. There's not a big upside or a downside surprise. Market reaction will be muted. And at Farro Capital, more than the expectations and the base case, we are more concerned about the tail. So there's one view that job market is actually tighter than what everybody's expecting, depending on the net hiring rate, and also the unemployment rate rise that we have seen recently was due to net immigration. And then there's the other theory which has been put forward by Baker Friedman Institute of Chicago, which is that the rise in job vacancies are actually a result of job-to-job transitions, meaning the welfare losses of labor market due to high inflation because real wages are down has actually given an illusion that job vacancies are very high. So what we are more concerned about is, obviously January number matters a lot, but more concerned about what the Feb and the March numbers, because that's where we will see a lot of revisions and we'll see more data. So we have to watch out, because labor market has a bearing for rates market, equity market, and credit market.
Yeah, absolutely. And it's pretty interesting. Bloomberg Economics actually says that in today's report, they do see a risk that we will get a way higher print coming in with payrolls adding, or 268,000 jobs being added. So it just goes to show that there really is uncertainty around what we might see, and that we could see a hotter print than expected. Let's talk more about what this will all mean from the Fed. So we heard from two Fed policymakers recently commenting on interest rates. Take a listen to what they had to say, and then we'll continue our conversation.
We must be clear in our communication about how further changes are intended to affect economic conditions. We should also refrain from prejudging the incoming administration's future policies. Instead, we should wait for more clarity and then seek to understand the effects on economic activity, the labor market, and inflation.
I still see us on a downward policy rate path. Looking at everything before me now, I'm not about to walk off this path or turn around. But the exact speed I continue to go along this path will be fully dependent upon the incoming data. We can stay where we are for a little bit, probably not long, but we'll see.
Hamza, Patrick Harker making it pretty clear there that the Fed will be going lower, but it's really about the speed. Markets are now pricing in around just one rate cut over the course of 2025. What do you think about that view?
Right. Fed mantra over the last 1 year or so has been data dependency and buying optionality, right? But one thing is clear, the bias remains towards easing. The question is that how far that easing would go. Our expectation is that until March, there's not going to be a rate cut, because if you see since September, since Fed cut rates, 10-year bond yields have gone up. First, they rose for the right reasons, which is due to economic activity improving, labor market improving again. And then more recently, we are seeing the term premium also increasing. So when it comes to interest rate policy, last year we were at Bloomberg show and we mentioned that 2025 is very difficult to call, and it still remains a very difficult call right now. It's to an extent a hall of mirror between the Fed and the market. Market says something to the Fed says something to the market, and that's why we have this data-dependent approach. There is a scenario, again, in 2025 that beyond March also, if the pro-growth policies of the new administrations are significantly pro-growth, we could see a long pause for 2025 also. But it's a very uncertain environment right now.
Yeah, so what are your views on the Treasury market then? We have a number of voices out there, Amundi, Citi, both saying that 5% is very possible. Are you of the same mindset, or do you feel differently? And where do you see the near-term top for this market?
Our near-term top is, again, close to 5%, and I'll give you the reasons why. So if you look at the rise in Treasury yields since September, first, it was driven by two things, economic improvement. Economic surprise in the U.S. continued to improve since Fed cut rates. And secondly, we saw an unprecedented rise in Treasury yield post-Fed cut. Usually, when Fed cut rates, the peak response of Treasury curve is 10 weeks, 50 days. But we saw instantly Treasuries rising up. So basically, Fed and the economy gave both economic and information shock, policy shock to the market. Since then, since elections, we are seeing a rise in term premium. It's a theoretical construct, but still, the term premium has risen to about 70 basis points, right, by some measures, right? And whenever we have seen term premium increasing, we have also seen interest rate volatility increasing. And these two both, when combined, they lead to also a reset in risk markets. We saw that in 2023. So far, we have seen Treasury yields going up. We have seen term premium going up, but we haven't seen interest rate volatility increasing significantly. It has actually come down from around 140 to 150 basis point in before elections to around 100 basis points. So if we see interest rate volatility also increasing from here onwards, that will come with an additional rise in Treasury yields to around 5%. And I think at 5%, we'll also start to see risk-off in markets. So that's why we say that when the risk-off in market happens, the rise in Treasury yield could be self-defeating, right? So that's why near term we see 5%. Beyond that, again, like I mentioned, it depends on the policies of the new administration.
Yeah, absolutely. Well, Hamza, thanks so much for sharing all of your thoughts on that. And good luck as you head into the new year and battle with all of this uncertainty, as we all are. That's Hamza Ayub, Executive Director and Portfolio Manager at Farro Capital. Still ahead, Lebanon elects a new president following a more than 2-year-long power vacuum. We'll get all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Lebanon's parliament has chosen Army Commander Joseph Aoun as head of state, filling a more than 2-year-long presidential vacuum. Aoun was widely seen as the preferred candidate of the U.S. as well as Saudi Arabia, whose assistance is needed for reconstruction efforts following Hezbollah's war with Israel. For more on this, Dana Kreisch, Bloomberg's UAE Bureau Chief, joins the conversation now. So, Dana, bring us up to speed here. There was some opposition to Aoun stepping into the presidency, but ultimately he clinched it, and Lebanon has its first president in 2 years. Tell us how he got the victory.
Exactly. That's what happened. In the first round, he didn't get the needed votes, and that's primarily because Hezbollah and its allies didn't vote for him. They just casted a blank ballot. It is more symbolic. They wanted to show that they are still there, even though they are very much under pressure. And then they held consultations, and a lot of reports that they met with the Saudi ambassador and the French envoy who was there and who were also present during the parliamentary session electing that president. And so in the second round, they came in and he got the needed votes, 99 votes out of 128. That's pretty good majority, and he won the election. But Hezbollah seemed under pressure, and they wanted to show that you cannot run this country without national consensus, which technically means in Lebanon terms, a sectarian makeup, of course, is that you cannot elect a president without the Muslim Sunni majority, which they are represented by Hezbollah and its allies. So it was more of a message that you cannot eliminate Hezbollah completely and the Shiite, of course, altogether from Lebanon, and that you need them to elect a president. You need that national consensus. But ultimately, he got it, and his message was quite powerful. He did say things that Hezbollah might not have liked. He talked about allowing only the state to hold arms, eliminating security gaps, talking about how he wants to consolidate power in Palestinian refugee camps. Of course, these are known to have their own security paradigm, and the army technically is not allowed inside. So there were a lot of promises, but of course, we have to wait and see how he's going to implement all of this.
Yeah, and what are the next steps then? He needs to form a full government, right? And then on top of that, if there's already still this tension that we expect with Hezbollah, how does he navigate that?
Exactly. So it's not going to be enough to have a U.S. or a Saudi-backed president. You need a prime minister who Saudi Arabia, Gulf countries, the U.S. would be comfortable to work with, because that would be where they will, launch a construction project, try to get funding, appeal to these countries for funding for reconstruction. And that's the main thing. And that's what Aoun actually said during his speech, is that he wanted better ties with Arab countries. He wants to focus on reconstruction in South Lebanon and in Beirut's southern suburbs after the Hezbollah war with Israel. And after that, he also needs to start focusing on restructuring of the debt, start talks with bondholders. We saw yesterday Lebanon, right after the election, extended, it's more of a legal term, but they technically extended their prescription period, which means any bondholder can't sue the government for money until 2028. So this is giving them more time. I think they thought that now that they elected the president, bondholders would actually go after them for not paying for since 2020.
Yeah, it's been 5 years or so, right? And
yep.
Bond markets have reacted pretty favorably so far, which indicates that they are positive, or at least hopeful that there is some sort of pathway here where the economy is able to come out of crisis. So, Donna, thanks so much for joining us this morning. That's Dana Kraish, Bloomberg's UAE Bureau Chief. Well, coming up on the show, we are going to be talking about Rwanda. The president of the country denies UN claims that his nation is helping M23 rebels seize territory in mines in the Democratic Republic of Congo. More on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Rwandan President Paul Kagame says his nation has nothing to do with M23 rebels operating in mineral-rich territories in Eastern Democratic Republic of Congo. A UN report claims Rwanda's forces were helping the militia seize territory in mines. Let's get more on this story now with Bloomberg's Ondiro Oganga. So, Ondiro, good to see you. Happy Friday. Can you tell us more about the president's stance on the war in Congo and what the prospects for getting a resolution to this are?
Hi, Christine. So there has been fighting in the DRC for the last 30 years, and President Paul Kagame says the people that are fighting have nothing to do with Rwanda. In fact, a bulk of them, including M23 leaders, came from Uganda. So this constant blaming of Rwanda does nothing to help solve this problem. And like you mentioned, he was responding to that report by UN experts that is alleging that M23 is continuing to seize villages and towns in the eastern part of DRC with the help of Rwandan forces. Another key issue that comes up in this report is mining, and that M23 rebels have seized the world's largest coltan mine, and they're shipping these minerals through Rwanda and making millions of dollars every single month. In fact, they're shipping up to 120 tons per month, and these are allegations that the president refutes and says nothing of that sort is happening. In the meantime, fighting continues to escalate. Since 2021, M23 relaunched the rebellion, and this has seen millions get displaced and thousands have lost their life. And the president says that the prospects of a ceasefire are thin because he has offered help in terms of resources, in terms of themselves, and DRC has turned it down. And he says that for a ceasefire and for peace to ensue, they have to go back to the basics, find out the root cause of this conflict in DRC.
So how does the president see this year shaping up then for the country?
The prospects markets are looking good. Just for context, we spoke to the CEO of Rwanda Stock Exchange, Celestine Warukumba, and he says that this year they're looking to list 2 companies, and this is on the back of really strong economic growth in the last decade that has averaged 6.6%, and they're hoping that this has injected some form of vibrancy into the private sector, and they will see that these companies will come to the market and also list, which will grow the market capitalization to about 10%. The last listing was in 2021 with MTN, and we were asking him how big does he see the exchange becoming, and he says an exchange can only be as big as the economy. So we put this question to the president and asked, is there prospects of privatizing some state-owned enterprises? And he says they've listed them and they're in the process of determining which ones to take off the government balance sheet and list them on the exchange.
Ondiro, thanks so much. That's Bloomberg's Ondiro Oganga. Now, for a look at some of the other stories that we are following on this Friday morning, Moody's says sub-Saharan Africa's economic growth is expected to improve to an average 4.2% this year from an estimated 3.8% in 2024. The growth will be driven by investments in energy and infrastructure and an expanded services sector. The ratings agency has also lifted its outlook for the region's credit fundamentals from negative to stable, saying fiscal consolidation efforts will help reduce debt. Ghana's finance minister, picked by new President John Mahama, says the West African nation hopes to secure more support from the IMF and other multilaterals. He told reporters in the capital that Ghana can't have a second wave of economic crisis. Once an investor darling, the country is just starting to recover from one of its worst ever economic and debt crises. Egyptian inflation has slowed to its lowest level in 2 years, easing the path for a first interest rate cut since 2020. Annual consumer prices in urban areas rose 24.1% in December, down from 25.5% the month before. Even with the deceleration, the headline figure remains elevated after a 2-year economic crisis, culminating in a $57 billion global bailout. Well, looking at these markets, we are pretty soft this morning. We've got weakness coming through for Asian equities. Also, U.S. futures are pointing lower. U.S. 10-year yields, actually the entirety of the U.S. curve continues to come down. The focus, of course, of the market today is really going to be the U.S. jobs report. Well, coming up, Lebanon elects its first president in more than 2 years. We discuss what the U.S.-backed candidate's win means for Lebanon and the region with the International Crisis Group next. Stick with us. This is Bloomberg. This is Horizons, Middle East and Africa. Our top stories this morning. Asian stocks and U.S. futures slipping as caution takes hold ahead of the U.S. jobs report, and more Fed voices signal rates may stay on hold for longer. Los Angeles tackles new blazes as the firefight enters a third day. The toll of devastation is climbing, with estimated losses of between $135 and $150 billion. Lebanon's parliament elects Army Commander Joseph Aoun as president, ending a more than 2-year power vacuum. It's just gone 8:30 a.m. across the Emirates. I'm Christine Berg in Dubai. Well, looking at these markets, and we look like we are heading for a soft finish to the week. U.S. equities are coming under further pressure. Remember, the U.S. stock market was closed yesterday, but what we're seeing here indicates that when we do reopen on Wall Street, we may be heading for further losses. Remember, stocks have been coming under quite a bit of pressure in recent weeks. We had a rally at the start of the week, but then that came off, and ultimately we ended Wednesday with choppy trading. So that's where the U.S. futures market stands. Looking at the Treasuries market, we have the 10-year yield coming back down a bit. We have seen a run up quite high. We popped over 4.7% a bit earlier in the week. Now we're sitting a bit lower than that, but still we're talking about quite elevated levels. The focus of the market today will be the U.S. jobs report. The expectation is that we will have seen hiring moderate a little bit over the course of December. However, there's nothing out there that indicates that there's any concern around this market. Now, in the currency markets, I have the pound up for you here. We're trading a bit sideways to a little bit weaker this morning. Yesterday, we saw the weakest level for the pound in more than a year as we had concerns around U.S. government borrowing coming into focus. We had a couple of research reports out from banks, including Wells Fargo and Deutsche Bank, saying that we could even see further losses for the pound from here as we consider where the Bank of England takes interest rates. And then in commodities markets, Brent crude is having William, a decent session today, up almost 0.4%. We are heading for a third consecutive week of gains. That will be the longest string of wins for Brent since July, and it comes as there have been a number of reports indicating that we are seeing tighter stockpiles, specifically in the United States. Now, let's talk about emerging markets for a minute, because yesterday we saw the MSCI Emerging Markets Index move officially into correction territory. So this basket of stocks has now fallen 10% from the peak that we saw in October. Much of this pressure coming through as traders consider where Donald Trump will take policies, how that will pressure the economies of emerging markets. And then also China has been a big factor that's dragging on the market as there's a lot of questions around the growth prospects for the country. Goldman Sachs is now saying that when we look at emerging market equities returns over the course of 2025, we probably won't see returns as high as it previously expected. And it says that it is overweight on South Africa and also on Saudi Arabia. And it boosted its outlook for Turkish stocks. So while we are in correction territory, some comments there from Goldman Sachs for you to chew on. And do note, because we're not having an Asia markets check, that the MSCI Asia Pacific Index is trading lower this morning. Now, let's get back to the region here and talk about the Middle East, because Lebanese lawmakers have elected Army Commander Joseph Aoun as the country's first president in more than 2 years. The U.S.-backed candidate's victory may signal Iran's waning influence in the region. Aoun's win ends a lengthy power vacuum and represents Beirut's return to the Arab and international folds. For more, let's go now to Beirut and speak to David Wood, Senior Lebanon Analyst at the International Crisis Group. David, thanks for joining us from Beirut. This is a significant moment for Lebanon, or at least it seems significant. Walk us through just how big this is for the country.
So I think that the election of Joseph Aoun as the president is a great first step for Lebanon on the road to recovery, but there are many hurdles ahead. So as you mentioned earlier, there have been, for more than 2 years, there has not been a president in Lebanon, as local politicians have argued and disputed who should be the next president. That has ended as of yesterday. However, there are still incredibly important steps to be taken, which each of them could lead to political paralysis. Now, the first is that Joseph Aoun will need to be involved in consultations with Lebanon's political leaders about who will form the next government. And then, of course, the president and the new government will need to get on to the kinds of reforms that Joseph Aoun promised yesterday in his acceptance speech. And these range from anti-corruption measures to ensuring that the state has a monopoly over weapons in Lebanon, in obvious reference to Hezbollah's military program. So it's an ambitious reform agenda that was brought forward yesterday by Aoun, which has provided cautious optimism for a lot of Lebanese. But it also requires the people outside the country show patience, because Joseph Aoun himself cannot be a miracle worker, and he will need the cooperation of a wide range of Lebanese actors to achieve these reforms.
So let's talk about what this means for the wider Middle East, because Aoun had the backing of the U.S., had the backing of Saudi Arabia. What does this say about the role that Lebanon may be playing going forward, not only in the Arab world, but also on the international stage?
So clearly, the fact that the deadlock ended now and that Lebanon has a president reflects changes in the region. And you've mentioned some of these. There was obviously the war between Israel and Hezbollah, in which Hezbollah suffered severe losses. You also have the fall of Bashar al-Assad, an ally of the Hezbollah regime, which was again another blow to Iran and its allies in the region. So this has clearly been reflected on the Lebanese stage. It was unthinkable, probably even weeks ago, honestly, that Hezbollah would support the election of a candidate like Joseph Aoun, who, while Hezbollah has cordial relations with him, honestly, given that in his capacity as the Lebanese army commander, he's worked alongside Hezbollah on certain operational issues, he was far from their preferred candidate. As you mentioned, he has the backing of the United States and countries like Saudi Arabia as well. So it definitely reflects regional shifts. However, we cannot say that just because Joseph Aoun was elected yesterday, that Hezbollah and Iran's influence in Lebanon has been significantly reduced. Hezbollah will still have a say in the government that's going to be formed in the coming weeks, hopefully. And also going forward more generally in Lebanese political life, Hezbollah and its allies will still have a say. So while Hezbollah might be in a more defensive posture than it was before due to recent regional events, it still has power within Lebanon on the domestic scene.
What are Aoun's options for combating Hezbollah and some of the demands that they may have? I mean, he's going to be navigating what sounds like a tricky situation on the ground.
Absolutely. And as I mentioned earlier, the key to all of the reforms that have been mentioned yesterday by Joseph Aoun, and in particular, this idea that the state will reclaim the monopoly over weapons in the country, requires the cooperation of Hezbollah. So, in this case, for example, we know that the ceasefire agreement requires Hezbollah's disarmament. But up until now, Hezbollah has said that it will only respect the ceasefire agreement as it applies south of the Litani River, which is close to the Lebanese-Israeli border. It does not have plans to disarm in the rest of the country. Now, Joseph Aoun could not, and the Lebanese state more generally, could not seriously deploy, for example, the Lebanese army to violently confront Hezbollah to hand over its weapons. Rather, the state would need to encourage Hezbollah to cooperate, perhaps through entering a political dialogue in terms of exchanging the weapons for political concessions for the Lebanese Shia community, which Hezbollah purports to represent, or potentially integrating Hezbollah's fighters and military infrastructure into the Lebanese army. But again, these things can't be imposed on Hezbollah. Rather, they need to be steps that are taken in coordination with the party and its supporters.
David, what does this all mean for Israel? Obviously, Aoun's going to need to keep the ceasefire together between Hezbollah and Israel. But given that Saudi Arabia and Lebanon will presumably be moving closer, and we know that Saudi Arabia is talking to the U.S. about normalization with Israel, there's just a lot to consider here. How could this impact its neighboring country?
Absolutely. And from Israel's perspective, I think that implementation of the ceasefire means everything. So while Israeli leaders might be pleased that Joseph Aoun was elected and not a presidential candidate who is closer to Hezbollah, that won't mean anything in the long term if Lebanon cannot implement its obligations under the ceasefire. But again, this requires patience from Israel and also from its allies, including the United States. As I mentioned earlier, Joseph Aoun cannot be expected to be a miracle worker. The Lebanese presidency itself, by the way, doesn't actually have that much power. It's an important ceremonial position, and the president is responsible for signing off on any new government. But beyond that, it's actually the government that does most of the executive day-to-day work in Lebanon. So again, as I mentioned, the next step will be government formation. There could be more political hoops to jump through. And of course, it's really important for Lebanon's leaders to swiftly move to forming a government and dealing with these urgent tasks facing the country, which are not just implementing the ceasefire, but also attracting aid for post-war reconstruction and dealing with the long-standing economic crisis. But actors like Israel, the United States, and other members of the international community need to be aware that these things will take some time, and that just because Joseph Aoun has been elected, there's still plenty more that needs to be done.
David, thanks for being so generous with your time this morning. That's David Wood, Lebanon Senior Analyst at International Crisis Group. Well, Chad's government says it has averted a destabilization attempt after security forces repelled 24 assailants that briefly entered the presidency. The attack happened while China's foreign minister was visiting the West African nation, but he had left the area before the assault. The government says at least 19 people were killed, including 18 assailants and 1 palace guard. For more on this, Bloomberg's Katerina Hoy joins us now from Dakar. So, Katerina, tell us what happened here. It's been 2 days since the attack, more than a dozen deaths here. What do we know?
Yeah, exactly like you said. I mean, authorities says that the army repelled an attack on the presidency in the capital, N'Djamena, a spot that's usually very well guarded. This happened only hours after a visit by China's foreign minister, and the CCTV that was released by Chadian channels sort of confirms the government's accounts that about 24 men stormed the first gate of the palace and attacked the guard, made it into the presidential grounds briefly. The men were armed with knives, not guns, according to authorities. At least 18 of the attackers have been killed, including two security guards. At least 6 people have been arrested, although it's unsure up to now who they are. But authorities say their investigations are ongoing.
What does this all say about the president's safety, especially in the wake of elections that have caused quite a bit of a stir on the ground?
I mean, while the capital was back to normal on Thursday, businesses and schools open as usual, most people went to work, there is a reinforced security presence on the streets of N'Djamena, a city that's already sees a lot of soldiers on a regular day. And yeah, the assault does come after 2 weeks after controversial parliamentary elections in which opposition parties boycotted a vote. They're accusing President Mohamed Debi's military-turned-civilian government of trying to entrench his power. It also comes after Chad surprisingly expulsed hundreds of French troops in December. France, the former colonial power and a close ally of Chad, has operated military bases in the country for decades, and similar steps were taken against U.S. forces in April. So while Chad is arguing that the expulsion comes as their forces are strong enough now to secure its territory, obviously this week's event shows that raised questions about their capacity. And while the attack was quickly repelled, it also raises questions about the security at the presidency and ultimately the safety of the president.
Yeah. What is the impact here on the national or on a regional level?
Well, I mean, as we like to say, Chad is sort of located in a troubled neighborhood. A lot of its neighbors have lived through military coups. There's Islamist insurgencies. In neighboring Sudan, you have two generals fighting a war over power. And I mean, while authorities said it was a destabilization attempt, and later the narrative changed with the government spokesman saying the attack was an isolated and desperate act by young people. Of course, it raises concern for the president, the current president, Mohamed Debi's father, so multiple attempts to overthrow him with rebels pushing towards the presidential palace. There's also Islamist insurgents active both on Chad's borders and in neighboring countries. So for the president whose power was already sort of being questioned, of course, there's analysts are saying that there could be other similar attacks in the future, and also for leaders in neighboring countries such as Mali, Niger, and Burkina Faso, which have also seen soldiers grabbing power recently and then cling onto power. It, of course, raises security concerns for them as well. Could they risk a similar assault on their power?
Katerina, thanks so much for sharing all that. I just noticed it's 4:45 a.m. where you are, so thanks so much for waking up and talking us through this important story. That's Bloomberg's Katerina Hoy. Well, coming up, Hershey seeks permission from U.S. regulators to buy a huge amount of cocoa as global shortages send prices to record highs. Don't miss that. We're going to be talking about it next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Well, Bloomberg understands Hershey is asking the top derivatives regulator in the U.S. for permission to buy a huge amount of cocoa through the New York Exchange. The move comes after global shortages sent prices to a record. Hershey wants to purchase over 90,000 metric tons of cocoa. That's exceeding the exchange's current limit and federal position limit. Let's get more with Bloomberg's agriculture reporter, Megan Dreesen-Albury. So, Megan, thanks so much for joining us. I have to say that I absolutely love this story. Hershey going in and trying to buy a massive amount of cocoa. Tell us why the company is looking to do this, and is this unprecedented?
Sure. So, yes, as you mentioned, my colleagues in the U.S. broke the news that Hershey is asking the CFTC for permission to buy a lot of cocoa from the New York Exchange, well above current limits. And the reason they're doing this, it's coming at a time when the world has suffered big supply shortages. Cocoa is very expensive. We've had 3 straight global supply deficits in a row. That's a lot. And then there's the potential for another in the current season. And as a result of that, cocoa is really expensive. It's just really hard to get your hands on it. Futures in New York are trading at something like $11,000 a ton at the moment. For comparison, just a couple years ago, it was below $3,000. So you can see just how massive the rally has been.
Yeah, and I was reading earlier in the story, too, that if it were to actually take out these amount of beans, it would wipe out, actually, the supply that is certified within warehouses. So there would presumably be a big market impact, and we will have to watch for that. Let's talk more about cocoa prices. They've been a bit volatile this week after a huge rally over the past year. Cocoa was the was the top performing major commodity over the course of 2024. Can you explain what is driving us now? I mean, you mentioned some of the things that have driven prices so high, but what's the outlook from here going forward? Is it for more shortages, for higher prices to continue?
Yes, that's right. So as mentioned, the world has had 3 supply deficits in a row, and now we're in the midst of a new season. So there's a big harvest going on in West Africa. Much of the world's cocoa supplies do come from just a couple of countries. Ivory Coast and Ghana are both major producers, and they suffered really bad harvests last year. There was both bad weather, and then the industry is also just dealing with the fallout of longstanding issues like low farmer pay and crop disease. So supplies are looking a bit better this season, but it's not a massive rebound. And cocoa prices are trading near an all-time high. So yes, I mentioned something like $11,000 a ton at the moment. Prices had roughly tripled just last year, so it's getting really high. And essentially, until we start seeing, better crops or people start eating less chocolate, it's unlikely that we're going to see a big drop in prices.
All right, Megan, thanks so much for coming on and talking us through that tremendous story by your colleagues in the U.S. Great reporting there by the team. That's Bloomberg's Megan Durson-Albury. Well, coming up, Wall Street's top banks are said to be planning to give out the biggest bonuses since the pandemic. We're going to talk about that next and get all the details. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Wall Street's top banks are said to be planning to give traders and deal makers their biggest bonus increases since the pandemic. The bonus increases reflect an upturn in business and optimism for the year ahead and are intended to help retain employees in a competitive industry. Let's get more with Bloomberg's Adam Haig, who joins us from Sydney. So, Adam, lovely to see you today. It looks really nice over there in Sydney. Happy Friday. Can you give us the details on these bonus hikes? What do we know about what's driving it? A bit of good news here for us to talk about today.
Yeah, hi, Christine. I always think that this time of the year is just super interesting because you get to look under the hood, you get to work out and get a real sense of who's getting paid and how those bonuses are going to look. So what we know at the moment, these early details, are that essentially bonuses are going to be up by kind of around 10%. So if we look at Bank of America, we're looking at an average hike for both investment banking and also equity traders of about that 10% mark. Over at Morgan Stanley and JP Morgan, it might even be more than 10% for some traders, according to our reporting. And then, in the likes of the investment banking space at JP Morgan, you could even be getting into the kind of around 15% increases relative to last year. So clearly, quite significant across the board increases. At Goldman Sachs even, it's worth mentioning that our reporting shows that, bonuses there could be even more than 10 or 15%. So, of course, these numbers are always it's tricky to there are underperformers, of course, on the one side, and there are the real outperformers, standouts on the other side that often get, really outsized moves relative to the averages. So you've still got to bear that in mind. But I think it gives you a real picture, this, of just the sense of what we're seeing in terms of the increases in compensation based on all the activity that we had last year.
So a good 2024 then. What do we think about the outlook for 2025, especially as we have the incoming Trump administration and the potential for less regulation that may mean more business for these Wall Street investment banks?
Yeah, well, of course, bonuses and compensation at Wall Street firms are about a few things, but certainly about rewarding people for performance of last year, but also to an extent, making sure they don't go anywhere in 2025 when we know that the outlook is still relatively fragile. There's quite a lot that could go wrong with the economy and with the banking landscape. So they want to keep their best and their brightest around. And I think what this bonus season will show that banks have, they've all already across the board done a significant amount of cost cutting. There are still banks, of course, like Citigroup that are kind of still struggling with that global strategy under Jane Fraser. But I think across the board, if you look at really the outlook for 2025, it could be still a pretty decent outlook for banking and for the investment banking landscape, especially if you compare it to kind of where we've come from. We've come from that pandemic high from a few years ago where activity really went through the roof. But then we've had a few years of real relative struggle where, rates had been going up, There was certain pressure on margins in certain places. But now with that inflationary impulse kind of largely having dampened and the Fed obviously well into a cutting cycle, 2025 could be still quite a decent year in terms of activity and outlook for the economy and for the banking landscape. So I think what this bonus season is showing you is there is a certain amount of optimism now going into the next 6 or 12 months that banks want to keep their best and brightest, want to pay them well and can afford to do so with the uptick that they're seeing in trading, especially in places like equity and fixed income trading.
Adam, thanks so much for all that. That's Bloomberg's Adam Haig. Well, looking at these markets, U.S. equity futures continue to stay under pressure. We've actually taken a little bit of a leg lower, just looking at where we are trading ahead of the U.S. jobs report. Here's something that's interesting, though. U.S. Treasury yields are starting to flip. We had the U.S. Treasury board up for you earlier. Yields were moving lower. Now we are pretty much flat. So that'll be interesting as, again, we move into the U.S. jobs report. And then oil. The oil markets are finishing the week on a strong point. We look to be headed for a third consecutive week of gains. Now, coming up, we're going to speak more about that U.S. labor market report. Stick with us for the second hour of Horizons, Middle East and Africa. This is Bloomberg. This is Horizons, Middle East and Africa. Our top stories this morning. Asian stocks and U.S. futures slipping as caution takes hold ahead of the U.S. jobs report and more Fed voices signaling rates may stay on hold for longer. Los Angeles tackles new blazes as the firefight enters a third day. The toll of devastation is climbing with estimated losses between $135 and $150 billion. And Lebanon's parliament elects Army Commander Joseph Aoun as president, ending a more than 2-year power vacuum. It's just gone 9 a.m. across the Emirates. I'm Christine Burke in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone at past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. Happy Friday, Christine.
Yeah, happy Friday to you too, Jen. Let's take a look at how these markets are shaping up. We appear to be heading into the final trading session on Wall Street of this week with a bit of softness coming through. S&P 500 futures, you can see there are flats, but we have been moving lower for much of the morning. Remember that U.S. equity markets were shut yesterday. So what you are seeing there with the futures is an indication of how we may open today on Wall Street when stock markets reopen again. The U.S. 10-year yields there, you can see we're moving higher at the moment, getting closer to that 4.7% level, which we broke through a bit earlier in the week, but we have been flopping around a bit over the last 20 minutes or so. So there is a bit of swinging happening within the Treasuries market, and that's probably just because we are all awaiting the U.S. jobs report a bit later today. Traders very keenly clued into what we are going to see come through from the U.S. employment report, as that is going to be the next big print that Jerome Powell gets when he considers where the Fed should take interest rates next. Now, in the currency markets, the pound is trading just a touch weaker this morning. This is after it weakened to the lowest level in more than a year yesterday as concerns came through around the UK government and how high yields may be factoring into its ability to borrow at the levels that it needs to fund all of its government initiatives. Also, of course, the path of the BOE's interest rates coming into focus for currency traders. And then when we look at the Brent markets this morning, Brent has had a really good start to 2025, and it's had a pretty good week as well. We're heading for a third straight weekly advance, up about 0.5% today. And if we do see Brent close out with that third weekly climb, then that would be the best string of gains for the global benchmark since July of earlier this year. So for all the uncertainty in the oil markets, we do seem to be kicking off the year on a stronger foot. Now, let's talk about emerging markets before we move on, because emerging market stocks yesterday entered into correction territory. We had been on the lookout for this because EM equities have been coming under a bit of pressure due to uncertainties around Trump and also uncertainties around the prospects for Chinese growth. But yesterday is when we ultimately saw that drop. It was losses for Samsung and TSMC in particular that dragged the index lower, and that was on the back of that news that Biden is considering stronger chip exports. So something to keep in mind as we move forward into the day ahead.
That's right, Christine, and we'll have more on EM later this hour. But back to our top story. President Biden says the U.S. government will cover 100% of the cost of the California wildfires for 180 days, calling the devastation catastrophic.
So today I'm announcing that the federal government will cover 100% of the cost for 180 days. This is going to pay for things like debris and hazard material removal, temporary shelters, first responders' salaries, and all necessary measures to protect life and property.
For more, let's bring in Derek Wallbank, our senior editor for the U.S. economy and government. He's joining us now. So, Derek, talk to us through the latest. Thursday, really, the story was developing by the minute, by the hour. Where are we at right now?
Well, Jennifer, we have had thousands of structures burn in the Los Angeles area. We are dealing with insured losses that could be $20 billion over, according to a J.P. Morgan Chase survey or estimate. The overall losses for this, though, I saw an AccuWeather summary that suggested $130 to $150 billion. If that's anywhere close, that puts this as not only the most expensive wildfires in U.S. history, but also some of the most expensive in terms of a natural disaster of any kind in U.S. history. That's the scale that we're talking about here. This is vast. We're talking about still multiple blazes that are going on in the north and the west sides of Los Angeles and its surrounding suburbs. The Pacific Palisades, that sort of area, photos and videos that are coming from there are just horrendous. You know, I grew up in Miami, and I remember after Hurricane Andrew came through, there was parts of it that resembled matchsticks, and I'm seeing some photos from that area that are much the same. Matchsticks and charred matchsticks that used to be houses. It's absolutely horrific what you're seeing there, and as I say, the costs are going to be absolutely immense. As we're speaking, firefighters are still trying to get a handle on most of these fires. There was one blaze in the Hollywood Hills that put the theater that the Academy Awards is held in a mandatory evacuation zone, to give some idea. That one seems like it's mostly contained, or if not entirely contained, but some of the other ones out near the Rose Bowl in Pasadena, as I say, the Palisades fire, one north of there as well that's just sparked up. You know, there are a lot of blazes going on. It's taxing the ability, right, frankly, of Los Angeles to respond to it.
And Derek, just on that, despite this still being a fast developing story, there's a lot of finger pointing going on, and a lot of people already talking about, you know, what was the cause of some of these fires to start. What have officials said in regards to this? Have you been following this at all?
Yeah, I think that's going to be one of the developing stories that we're going to see as we come through. You know, on the insurer's side, we have seen some letters just in the recent hours from insurance lawyers asking local utilities to preserve, preserve records. That's one of those pro forma steps that you take as you're sort of trying to figure out what's going on here. But the overall response is one that is going to have a lot of questions asked of it. I think maybe not in the way of the firefighters themselves. There's endless tales of brave heroism and going after that. But in terms of the response and the preparation here, look, you're talking about a landscape here that hasn't had meaningful rain since April, and so was the environment cleared in a way? You know, it is brush cleared and things like that. There was some reports that there wasn't adequate water pressure when firefighters were fighting the fires. There's several reasons that could happen. Officials have said that they've had adequate water supply, but that the drain the usage drain was affecting the water pressure. But that's going to be something that's heavily looked at. And candidly, the mayor of Los Angeles, Karen Bass, was overseas in Ghana at the time that the wildfires broke out, and there was some suggestion that maybe that suggested that there was insufficient preparation here. I mean, there's a lot of these sort of things. It's hard to say too definitively, but there are going to be there. I will say, lastly, there was one incident today that was particularly jarring. There was a smallish area north and west of Los Angeles that was targeted for an evacuation order. The evacuation notice went to about 10 million people across LA, and it scared the pants off of a ton of people, understandably so. But when you have those sorts of things, there will be questions asked, and rightly so, as people try and figure out what has happened so they can figure out how to mitigate it going forward.
Absolutely, and those evacuation orders leading to traffic and again causing even more of a difficulty for the city. Thanks so much, Derek Wallbank, our breaking news and managing editor.
Well, back to the Middle East now. Lebanon's parliament has chosen Army Commander Joseph Aoun as head of state, filling a more than 2-year-long presidential vacuum. Aoun was widely seen as the preferred candidate of the U.S. as well as Saudi Arabia, whose assistance is needed for reconstruction efforts following Hezbollah's war with Israel. For more on this, Dana Kreisch, Bloomberg's UAE bureau chief, joins us now. Dana, good to see you this morning. Thanks for being here to update us on this. As we look at Aoun's next steps, first, what were the things that we heard him say in his congratulatory speech, or the first speech that he gave, and what are his immediate next steps?
A very unusual speech and a break from tradition from the rest of the presidents that came along. Primarily what he said, that he wanted the state to be the only holder of arms in the country. And this is quite powerful, given that Hezbollah lawmakers were sitting there, and you saw a lot of the other lawmakers clapping right after, kind of cheering him on for that thing. And he also said that he wanted to eliminate security gaps. He wanted to regain control of Palestinian refugee camps, and we know these camps in Lebanon, they have their own security paradigm. The army isn't allowed to enter unless it has a permit or a permission from let's say, Palestinian leadership and the government. He wants to take control and consolidate the government's power, the state's power, especially security-wise, along the border, be it in Syria or along the border in Israel. And this is going to be a very tough task for him, though he was army commander and still is. The daunting task, of course, is also making sure that the ceasefire between Hezbollah and Israel lasts, and that implementing 1701, meaning keeping Hezbollah away from the border. This is going to be very difficult for him, but it seems Hezbollah is willing to take on this task and is take on whatever the new phase in Lebanon's history is, and it starts now. So what we are seeing on doing is that he is saying whatever the Lebanese want to hear. He's saying things that could be difficult in terms of promises. He also promised reconstruction, promised better ties with Arab countries. So it remains to be seen what he needs to do. But now he needs to hold consultations with parliamentarians to name a new prime minister who also needs to be appealing, or the U.S., the EU, and Arab Gulf states need to be comfortable to deal with, and in order to help Lebanon, especially when it comes to funding for their reconstruction.
So is there a top contender then for the prime minister role?
That's tough to say. We saw yesterday that they were asking the current Prime Minister, Najib Mikati, if he would stay on, and he said, I need some time. But I think there are several prime ministers, especially from the Sunni community, that would be probably interested. But there aren't any contender or names that have surfaced in the past couple of hours since his election.
All right, so we have so much to watch then. Thanks, Dana, for updating us on all. Dana Kreisch, Bloomberg's UAE bureau chief. Well, still ahead, Shuaa Capital says that the U.S. 10-year yield will likely rally if today's payroll numbers disappoint. More on their market strategy next. This is Bloomberg. Welcome back to Horizons, Middle East and Africa. I'm Christine Burke in Dubai. Well, as investors await the key jobs report later today, we have heard from a number of Fed officials. Fed Governor Michelle Bowman and Philadelphia Fed President Patrick Harker have both encouraged a cautious policy approach, citing lingering inflation risks. Take a listen.
We must be clear in our communication about how further changes are intended to affect economic conditions. We should also refrain from prejudging the incoming administration's future policies. Instead, we should wait for more clarity and then seek to understand the effects on economic activity, the labor market, and inflation.
I still see us on a downward policy rate path. Looking at everything before me now, I'm not about to walk off this path or turn around. But the exact speed I continue to go along this path will be fully dependent upon the incoming data. We can stay where we are for a little bit, probably not long, but we'll see.
Well, joining us now is Aarthi Chandrasekaran, Head of Asset Management at Shuaa Capital. Aarthi, thanks for being with us today. You heard there from two different Fed officials. The narrative there, the tone, cautious, data-dependent, none of that is new. But speaking of the data, we get that big U.S. jobs report today, the December payrolls figure. What are your expectations?
I think, of course, all eyes on the payroll numbers. I think the manufacturing will continue to have some weakness, like we have seen in the recent months and recent quarters, while you might see an increase in the healthcare, which will show a lot of positive strength. But I think what actually matters, Kristen, is at the end of the day, the headline numbers and the unemployment rate, right? So if you kind of see a bit of weakness or downside risk on the unemployment rate, like if it inches up to like 4.4, or if the payroll falls to 150-ish, or even below, then you might see kind of a relief rally as far as the treasuries are concerned, as far as the stock markets are concerned. But if you were to get a very strong payroll number, just in line, just like last month, which is like 200 plus, then 10 years could go to 4.8.
Yeah, and Bloomberg Economics does actually see that we will get a blowout report to the upside. It's forecasting well over 200,000 in terms of the addition of jobs that we may see. And so that does show that there is room for a surprise here. You say that 4.8. As you look beyond this report, we look to the weeks ahead. You go out a month from now. And what do you think the near-term top is for the U.S. Treasury market at the moment? Some voices out there are calling for some pretty elevated numbers, 5.5%, 6%.
It's hard to find actually a top, but you're seeing a bear steepening across the U.S. and not just the U.S. in any of the global markets, right? Like UK gilts or Japanese bonds. So, I mean, it's very hard to say where the top would be, but you're seeing a widening of term premium in the long end of the curve. It's because of so many reasons. One is fiscal concern. You have a treasury of close to about 9 trillion getting rolled over. And there has been a very weak appetite for treasuries in general. You've seen the recent auctions.
Yeah.
The 10s and the 30s, where the tails have been really long. So with this kind of a backdrop and a sticky inflation, it does look like the 10 years would be more closer to 5 rather than to 4. So, I mean, that's what we are expecting, and which is why we are a bit cautious on duration.
Yeah, and there's so much uncertainty, and this is such a dynamic market. I mean, you mentioned a number of those factors, and that's what makes it so challenging. As we look ahead into 2025, it's clear that uncertainty is going to be a big driver. But aside from the uncertainty, aside from Trump policies, what are the biggest driver of markets for you this year?
I think for me, it's the economic growth of U.S. because it was the strength of and the resilience of the U.S. economy in 2024, which was a surprise to a lot of us, right? And it was that strength which basically shaped the dollar in 2024. It was that strength which actually got the capitals into the U.S. market. It was that strength which the Fed was able to not aggressively cut rates. So everything boils down to the economic growth. As long as we get the strong economic data from the U.S., as long as economic growth is in line with the broader expectation, which is 2.5 to 2.7 by the consensus this year, I think the rate market, the currency market, the equity markets can stand tall and elevated.
Okay, so it sounds like you're somewhat bullish on U.S. equities. And what about earnings?
I think that's the key for U.S. equities, right? Earnings momentum has always been the key the whole of last 2024. We're entering quarter 4 earnings season, and Bloomberg consensus is talking about 11% earnings expectation. It's very important these expectations are met. It's very important for the management guidance to be robust. It's very important for the mega tech to deliver, because ever since the start of the bull rally, which was quarter 3 of 2022, it was all about AI. It was all about mega tech. It was these companies which actually took everything on their shoulders and which is running with the market. So it's very important for them to deliver. We would be very cautiously watching what the management guidance would be for these companies going forward. Would there be any change in terms of the return on capital invested? Would there be any pushback by the management in terms of the timings? It's will be very closely watched by the market. But beyond the earnings, I would again talk about the stronger economic data, which will probably take the U.S. equities to the next level. Yields being very high, like the 10 years at 4.8, will have a wobbling impact on the equity markets in general. But as long as earnings are going to be great, I think we can still manage higher yields.
Yeah, just very quickly, can you give me your view on the credit market? How do you play credit markets in 2025?
Higher for longer is obviously the theme. Credits have done well from a spread perspective and from a carry perspective. If you're not expecting a recession, which none of us are at the moment at least, then default risk is unlikely to spike, and then your credit spread's unlikely to widen. You can easily make those 5.5% without having to stick your neck out, in those high quality names. So I think we like credit. I mean, it's a very good source of income, just like 2024.
All right. Well, thanks so much for being so generous with your time this morning. Good to see you. That's Aarthi Chandrasekaran, head of asset management at Shuaa Capital. Well, still coming up on the show, China's central bank is suspending its purchases of government bonds in a bid to temper investor bets on weak growth. Details next. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. China's central bank says it will suspend buying government bonds in its latest attempt to temper investor bets on weak economic growth that have undermined the currency. For more, let's bring in Bloomberg Intelligence Chief Asia FX and Rates Strategist, that's Stephen Chu, joining us now. So, Stephen, talk to us about why the PBOC is taking this measure and why now?
I mean, it's not really a surprise because the China central bank have been telling investors to not buy bonds aggressively, given that yields are at record lows, especially the longer end. But nobody really listened. So, I mean, at the end, it really had to show by example that they're not buying. So, like investors, banks, foreign investors, you really shouldn't buy as well. Of course, today we saw yields rebounding upon the decision. Also, the Chinese currency has rebounded. But then, it's probably not going to last. And also, of course, we know that later this month we're going to have Donald Trump coming in and all the trade war risks and all sort of that, it's also coming in as well. So now probably that's why this window, a relatively quiet window, might be a good opportunity for PBOC to say that. But it's not going to last. Eventually, it will have to buy again just because nobody's really absorbing that. Foreign investors are starting to flee the CGB market since last year. So
then, Stephen, what can they do if there are so many other headwinds sort of coming up in the periphery? Is there anything else that they can do for it to actually last?
To be honest, whether we're talking about the bond space or the currency space, there are not much they can do. Whatever they do, whether it's like the stopping buying bonds today or whether they are squeezing offshore liquidity to support the currency, it's just going to be temporary because well, I mean, we can just look at Japan. So what happened basically is without a sustainable recovery in the economy or structural change in the economy, I mean, it's very hard to change the monetary policy. So rates and the currency will just have to be under pressure continuously. So investors will just view this as an opportunity to buy bonds or buy dollar yuan or short yuan going forward. So it's not going to change the longer term trend.
We'll watch out for that. Bloomberg Intelligence Chief Asia FX and Rates Strategist Stephen Chu. Stephen, thanks so much for joining us and for your insights. Let's take a quick check at where markets are positioned ahead of Friday, the trading day later today. We did mention we are waiting for that U.S. jobs report that is coming later today. Many investors really sitting on the sidelines, trying to get some indication for what it means for monetary policy. Although we have heard from a number of Fed speakers throughout the week, really indicating that potentially we will see an extension in pauses for rate cuts. But right now, S&P futures largely unchanged, as well as NASDAQ futures, Eurostock 50 futures as well. Many investors sitting on the sidelines, supposedly. And we've been talking all week about bonds and the volatility that we have seen there. We have seen the volatility hit the U.S. bonds, as you can see indicated on the screen there, the 10-year at 4.69 there. And also Thursday, we were watching closely to UK UK gilts, and also to some of the other bonds and currencies globally that are really reverberating from the reaction from a lot of the data and the speakers that we've heard this week. All right, stick with us. Coming up, Chad's government says it has averted a destabilization attempt after assailants briefly entered the presidency. We discuss the rate and scale of the violence next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks and U.S. futures slipping as caution takes hold ahead of the U.S. jobs report, and more Fed voices signal rates may stay on hold for longer. Los Angeles tackles new blazes as the firefight enters a third day. The toll of devastation is climbing, with estimated losses between $135 and $150 billion. And Lebanon's parliament elects Army Commander Joseph Aoun as president, ending a more than 2-year power vacuum. It's just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Christine Berg in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa, the second hour of our show.
Definitely. And on Friday, Christine, don't forget that. Listen, and it is NFP Friday. Many investors are waiting to see the evidence of really what we're seeing with the U.S. economy. And if we take a look at where markets are positioned ahead of the trading day, potentially indicating a lower start for markets. Although right now with S&P futures, we are seeing them largely unchanged. We have to remember, though, that Thursday we did see U.S. cash stocks closed in remembrance or in observance of former President Jimmy Carter's state funeral. But again, we did get a number of Fed speakers throughout the week, again, indicating that potentially we're going to see a pause in rate cuts. We will see the jobs report coming out later today at 8:30 Eastern time. Potentially, we'll see some indication about the path for monetary policy, although many people expecting the unemployment rate to support a pause and support what we've been hearing from Fed speakers throughout the week. We also had the 10-year yield on the board here. We've been paying close attention to yields all throughout the week, seeing a lot of bearishness globally. U.S. 10-year right now at 4.69. But still, what's really been hurting and putting pressure on EM currencies globally is that stronger dollar story, and we are seeing a slightly stronger dollar right now. We're actually seeing the Bloomberg Dollar Spot Index hovering near the highest level in over 2 years. So we'll wait again to see what we do get later today. And finally, we have Brent on the board up just about 0.5%, trading around $77.33 a barrel. We have had a number of oil headlines this week pointing to falling stockpiles in the U.S. There's also market tightness, but still we will see a third week of weekly gains for oil. And finally, I want to bring this terminal chart to our audience because, as I mentioned, EM currencies have been hit. Also, EM stocks have been hit. And as this shows, the MSCI EM stock index entering a correction on Thursday, dragged down by Samsung and TSMC. But we should remember this index is also heavily weighted by Chinese equities, and we're paying close attention to what is happening in China there, of course. But the expectation amongst most traders is that as we inch closer to Trump's inauguration, potentially we'll continue to see more choppiness expected, not just for equities, but also for treasuries globally.
Thanks for that update, Jen. Well, let's talk about Africa. Rwandan President Paul Kagame says his nation has nothing to do with M23 rebels operating in mineral-rich territories in Eastern Democratic Republic of Congo. A UN report claims Rwanda's forces were helping the militia seize territory and mines. Let's get more on this story with Bloomberg's Ondiro Oganga. So, Ondiro, if the president is opposing this report from the UN, tell us exactly what his stance is on the report and why he's saying that, and what also are his views on the war in Congo.
Hi, Christine. So this war has been going on for 30 years, which is a long time. And President Paul Kagame says Rwanda has nothing to do with the people that are fighting there. He says, in fact, a bulk of them, including M23 leaders, are coming from Uganda. So blaming Rwanda does nothing in helping the country reach a conclusion and solve this conflict. And he was replying to a report by UN experts that are alleging that Rwandan forces are aiding rebels in seizing towns in eastern part of DRC to control trades and also mines. And speaking of mines, the report also goes ahead to say that these rebels have seized the world's largest coltan mine, and they're shipping these minerals through Rwanda and making millions of dollars every single month, something that the president also refuted. In the meantime, fighting is intensifying. Millions have been displaced. Hundreds of thousands have lost their lives. And President Paul Kagame says that DRC is not interested in a ceasefire. The prospects are really thin because every single type of help they offer in terms of resources, in terms of personnel, DRC has turned it down. He also took a shot at the people who compiled the report, saying they lack integrity because they're ignoring broad daylight atrocities that are committed in DRC by other people, but are very quick to blame Rwanda.
So what can we expect to see out of Rwanda in the year ahead? How does the president see the country's fortunes either increasing or, on the flip side of that, being challenged?
Christine, just to contextualize that answer for you, in the course of the week, we spoke to the CEO of Rwanda Stock Exchange, who says they're expecting to list 2 companies this year against the backdrop of strong economic growth in the last decade that has averaged 6.6%. And these 2 new listings with normal trading is expected to grow market capitalization by about 5 to 10%. And the last listing was in 2021, bringing total listings on the exchange to 10. And he said that the exchange can only be as big as the market. So we posed this question to the president and asked, how does the government intend to boost listings on the exchange? And he said they've compiled all state-owned enterprises. They're reviewing them to see which ones to take off the government balance sheet, privatize them, and then list them on the exchange.
Andiro, thanks very much for your time this morning. That's Bloomberg's Andiro Ognagga.
Now, let's stick in the region. Chad's government has said it has averted a destabilization attempt after security forces repelled 24 assailants that briefly entered the presidency. The attack happened while China's foreign minister was visiting the West African nation, but he had left the area before the assault. The government says at least 19 people were killed, including 18 assailants and 1 palace guard. Let's now bring in Beverly Ochieng. She's the control risks senior analyst for Francophone Africa, joining us from Dakar this morning. Beverly, great to have you on this morning. So we have varying incidents of militant control throughout the continent happening. Do you see any trends in what has happened in Chad, also what is happening in Congo? What does this tell you about sort of the state of militant violence right now?
Particular, there are various groups that would be looking to undermine the government, despite the fact that the transition period, which started in April 2021, came to an end when Deby, who claimed that he was being targeted in assassination, won that election. And now we're seeing that there's various groups. So in the Lake Chad region, in the western part, there is Islamic State and Boko Haram militants who have been behind nearly a decade of an insurgency. And in 2015, they carried out one of the very first attacks in N'Djamena. They have been held off since due to an ongoing offensive. There are also rebel groups that are against the government in Chad. And in fact, in that 2021 violence, which killed Deby's predecessor and father, they did try to come into N'Djamena, and they have been kept off over the years, but they still oppose that government. And Chad also continues to face credible coup and assassination attempts against the president, given the fact that he has had shifting policies and sometimes very divisive decisions, which make him a credible target for such a coup. India, Congo, of course, the insurgency is going on for decades, as we've just heard. It has undermined the credibility of Tshisekedi, who has campaigned on stabilizing the East. In addition to Islamist militant groups such as Islamic State, which is linked to the ADF, there's also M23. There are various other regional factions which have not just destabilized the East, but also led to tensions within the region. And that trend is likely to go on over this year in both countries and even across the wider Sahel, as well as parts of Central Africa, where insurgent and rebel groups remain active despite military operations and regional coordination.
Beverly, we've heard from China's foreign minister responding, saying that China does support Chad's ability to keep the country safe. Given that we have seen an exodus in some ways of U.S. troops and also French troops, at least in Western Africa, does China fill the gap in supporting some of the stability across some of these countries?
I mean, China has sometimes provided military or armored vehicles to various countries, Mali included, Chad, and some of the other Sahel countries. But they've also grown to be a strong economic partner within the region. And it's a bit of a vote of confidence in those governments because in as much as Western forces are leaving, some of the Sahel governments are also trying to undertake their own security, either through new partnerships beyond just China. In the Sahel, Mali, Burkina Faso, Niger, we've seen a lot of Russia coming in and Turkey also giving support. In Chad, they are awaiting the deployment of Hungarian forces. And this combination of efforts is what enables a country like China to continue to invest economically. Recently in Mali, they opened one of the first lithium mines, which is seen to be the biggest in West Africa. And in Chad, they continue to support infrastructure projects. So that combination of government confidence and government-to-government cooperation, despite the departure of the West and the insurgencies that are raging, is part of the reason those partnerships continue to be solidified.
Does President-elect Trump taking office change your outlook on that?
I mean, Trump will definitely have a more transactional relationship with various African countries. He hasn't really been the biggest proponent of having, military forces on the ground. So it does feel quite convenient that at this point, U.S. forces have effectively left Niger, which is where they had one of the biggest bases, as well as Chad, despite the negotiations for them to return. He will have a much more business-centric bilateral relationship. But you also have to remember that the U.S. did target some African countries, including Chad, with a visa ban, and that's something that's likely worth looking forward to. But he might have tensions with Chinese involvement. So the AGOA Trading Act, which is supposed to be lapsing in September, will be one of the things they'll be possibly negotiating to have better terms for the U.S., but also to be able to be in a better competition or stance with China across the region.
Do you see the situation potentially getting even deteriorating, I guess, even more for some of these countries? And how does that translate then economically? We should mention some of these countries, critical for mining, of course, important for China. How do you think that sort of connects?
I mean, broadly speaking, the insurgency does seem to be deteriorating. Just overnight, there was one of the biggest attacks in northern Benin, and that's a result of the deteriorating situation in the southern parts of Burkina Faso and Niger. And as countries are trying to look for partners beyond the Sahel, they're likely to start looking towards the Gulf of Guinea. Now, the risks to the capitals of, say, Benin or Togo or Cote d'Ivoire or even Senegal are really minimal. So investors can still look to those environments if they want to diversify the mining sector. Of course, the Sahel has been the biggest mainstay for mining, but beyond insurgencies, political decisions such as possible expropriation or even taking over, nationalizing of resources has become a bigger deterrent, interestingly, than even the insurgencies. Security can be in some ways easy to contain or easy to prevent and put risks against, but political decisions that are hostile towards foreign investors are much more difficult to predict, and resilience towards compliance with labor laws or regulatory laws are more important, while also considering what regional insurgencies are likely to do in terms of intra-regional trade, tensions, as well as long-term stability.
Beverly, it's always great to get your insights on the show. Appreciate you joining us this morning. That's Beverly Ochieng, Senior Analyst for Francophone Africa at Control Risks. Appreciate your time. Now, a few other stories we're following. Police in Mozambique have shot and killed 3 people as thousands gathered to welcome the return of opposition leader Venancio Mondlane. The country saw its biggest ever protests after official results showed Mondlane lost October's presidential elections to ruling party candidate Daniel Chapo. Mondlane left the Southeast African nation almost 3 months ago, saying he feared for his life. The president of Ivory Coast, Alassane Ouattara, says he's considering seeking a 4th term in office later this year if his party backs his candidacy. The 83-year-old says he's in good health and eager to serve his country. Under Ivory Coast law, presidents are only allowed to serve 2 terms, but Ouattara's party successfully argued that a new constitution adopted in 2016 wiped the slate clean. And Moody's says sub-Saharan Africa's economic growth is expected to improve to an average of 4.2% this year from an estimated 3.8% in 2024. The growth will be driven by investments in energy and infrastructure and an expanded services sector. The ratings agency has also lifted its outlook for the region's credit fundamentals from negative to stable, saying fiscal consolidation efforts will help reduce debt. And for more stories like this from across the continent, be sure to subscribe to the Next Africa newsletter on the terminal and our website and our podcast available on Apple, Spotify, and wherever you usually get your podcasts. Now, coming up, Damac's founder and chairman is set to invest billions in building U.S. data centers. Our interview with Trump ally Hussein Sajwani next. This is Bloomberg.
We hope sometime this year we'll be announcing some acquisitions of lands, and then of course we'll follow that design and construction. So there is a lot of work that we have to do to invest the $20 billion.
$20 billion, that's a substantial amount of money. How are you funding this deal? Can you provide specific details on where that $20 billion is coming from?
As you appreciate, this is an asset-based business. It's an infrastructure. Normally 60 to 70% you borrow from the banks or from financial institutions or bonds, leverage. Damac property will be able to put the equity, which will be in the range of the other 30%, which will be around $5 to $6 billion. Damac Properties' balance sheet today is capable of producing that money in the coming 4 years through its own resources. Having said that, if the opportunity increases and we get more opportunity, we'll be more than happy to bring third-party partners with us.
Hussein, it's Creedy in London. When you talk about those third-party partners, who are you talking about specifically? Are there banks, for example, that you have in mind?
We're already talking first. Our first line is to talk to partners in U.S. who will bring added value if they are in the construction business, they are in the land business, they are in the power business. So first we're looking at added value partner, not just to bring money, but to help us to execute in this business. That will be the first choice.
Well, that was Damac founder and chairman Hussein Sajwani speaking to Bloomberg TV after announcing a $20 billion investment into U.S. data centers. Now, let's take a look at some of the other stories that we are following this morning. The U.S. Supreme Court has cleared the way for President-elect Donald Trump's sentencing later today in a criminal case over hush money payments. In a 5-4 decision, the court rejected Trump's request to halt the New York sentencing while state appeals courts consider his claim of presidential immunity. Now, the judges said the burden on Trump would be relatively insubstantial, with no prison time expected. U.S. tech billionaire Elon Musk has waded into Germany's election with a conversation with far-right candidate Alex Vidal on his social media platform. The discussion ranged from Hitler and Stalin to aliens and a human settlement on Mars and lasted just over an hour. The X Spaces event with the leader of the Alternative for Germany party comes ahead of federal elections in the country next month. Washington has gathered to pay tribute to Jimmy Carter, bringing together political rivals to honor a former president praised by both parties for his humility and also his decency. The U.S. marked a day of national mourning for Carter, who died in December at the age of 100. The state funeral at the National Cathedral was attended by President Joe Biden and President-elect Donald Trump, alongside predecessors Barack Obama, George W. Bush, and Bill Clinton. And Venezuela's opposition leader, Maria Corina Machado, has been briefly detained following a protest against President Nicolas Maduro's planned inauguration. He is due to be sworn in for a third term today after claiming victory in last year's disputed election. The arrest marks a significant escalation by the autocratic ruler, who has been cracking down on dissidents in recent months. Coming up, Wall Street's top banks are said to be planning to give out the biggest bonuses since the pandemic. We're going to get the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Wall Street's top banks are said to be planning to give traders and deal makers their biggest bonus increases since the pandemic. The bonus increases reflect an upturn in business and optimism for the year ahead and are intended to help retain employees in a competitive industry. Let's get more with Bloomberg's Adam Haig, who is joining us. So, Adam, walk us through the details and really what does this show about the state of the industry right now and about the outlook for 2025?
Yeah, hi. I think really what we're seeing here is a kind of a broad picture of a pretty decent uptick in what we're going to see from compensation and bonuses based on last year. So if we look at Bank of America, what our reporting shows is that the average investment banking and equity trader in that kind of area is going to get in the region of 10% increase on last year. Morgan Stanley and JP Morgan is going to be looking at probably a little bit more than 10% for traders. And then there are even some areas like specifically investment banking at JP Morgan, where our reporting shows it'll be more in the region of about a 15% kicker relative to last year. So clearly some pretty decent numbers and very reflective of not just the performance of staff last year, but also, of course, the uptick in activity levels we saw, especially in areas like equity trading, fixed income trading. They really picked up, and this is a way for employers, of course, to reward their top staff, but also as a way to hold on to them, because 2025 does look like a year where there might be a pretty benign outlook for the economy that's not particularly kind of worrying for banks, and in which case they want to hold on to their best people. They expect a continuation of deal activity to increase through the year and need the best people, of course, at their banks and not wanting to let people go to rivals.
Adam, does this Bloomberg intelligence report tell us anything potentially about the impact of AI tech on global banks and what we could see in the future?
Yeah, well, the Bloomberg intelligence folks have really dug pretty deep into, just how much of a landscape sea change we could be seeing in jobs in banking over the next kind of 3 to 5 years. So the headline number of 200,000 jobs over the next 3 to 5 years might not be entirely surprising to a lot of people who watch this space, where, of course, AI is having some quite transformational impact on the way that people across the banking industry do their jobs. But what it's picked out is specific areas, of course, back office, areas of middle office, areas like operations. That's where the feeling is that you'll see the biggest number of changes. But of course, interviewing some of these CTOs and some of the respondents in this survey, it's clear that a lot of them still expect, an even bigger reduction in headcount than that kind of average headline number. So clearly there's room for more changes ahead. Not the first people, of course, to do some detailed work on how AI is changing the landscape, but some very interesting numbers here that give you a pretty good perspective on the kinds of jobs that are going to be, probably not looking too good into the future.
All right. Very fascinating reporting there. Bloomberg's Adam Haig there in Sydney for us. Adam, thanks so much for joining us. Now let's take a quick check at markets right now. Of course, investors are waiting for the release of the U.S. jobs report later today to get some indication for what the path looks like for monetary policy. But right now, largely unchanged for a number of indices right now. But that's where we leave it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Joburg alongside Christine Burke in Dubai. Stick with us for Daybreak Europe.